well, what do we have here, my friends? What we have is a very nice intraday rocket ship coming off a really weird sail down. The traders, they looked at Palantir's earnings and they said, friends, oh my gosh, the earnings are so good. The earnings are so good at Palantir. They can't possibly ever be any better than this. In fact, if you follow me, Kevin, on X, you'll find Palantir leaked its assets. Its assets were heavily leaked. They were leaked all over the place. They were leaked so much that it was unbelievable that Kevin was able to obtain the footage of the leaked assets. But we got the leaked assets for Palantir. The Palantir leaked assets and the balance sheet were so phenomenal. People thought it just can't get any better than this. And they had to take a little bit of a break. They had to take a bit of a break. That's it. They just can't handle how good the assets are. Can't handle it. Anyway, well, welcome in, everybody. Welcome back. Obviously, we've got, we spent some good time this morning talking about market function and liquidity, which, we've been talking about on the channel for, frankly, the last couple weeks here. So we don't have to rehash all of that. But if you've been watching my channel for the last couple weeks, you've been seeing me set up the warnings of liquidity. But anyway, Trump calls Mamdani a Jew hater. Huh. Okay, I just saw that headline come through. Anyway, yeah, I mean, here we are, and let's see how the day unfolds. But somebody here's got a question. Hey, any idea when you stop planning to raise funds for HouseHack? It aligns really with the Federal Reserve and their schedule of panic, right? So far, I don't actually think we're going to see panic, but I always just want to be clear with people. Like, if the Fed, like, let's say tomorrow, okay, because tomorrow's ADP data, that's a big day, okay? So what happens if tomorrow we get ADP data and it's negative 50,000? Okay, people are going to literally make a dump in their bed. I'm trying to say that in the PC way, okay? They're going to SH9T the bed. So, to some extent, that jobs catalyst tomorrow will be critical, but we're not expecting it to fall off a cliff. So, do we really see a bad catalyst with ADP? I mean, market economists are projecting 35,000. Well, that was as of yesterday. I'll go pull up the new numbers in just a moment. But yeah, I mean, when does it make sense to stop offering people the 5% convertible bond yield? Well, it makes sense to stop doing that when rates get rapidly and dramatically cut. So I don't know when that's going to be. But, just a 25 bippy doodla here or there, I don't, it doesn't really make that much of a difference. But I will say, I mean, we are very, very happy. I mean, and I'm not trying to pitch it, read the solicitation. This is not a solicitation. Read that at househack.com or reinvest.com. But, yeah, I will say very impressed. I think what's happening is people are recognizing stocks are at these all-time highs, and I don't know, if people are just trying to diversify or what, but people are throwing money at HouseHack right now. I mean, the first 3 days of November, we raised almost $500,000. We might have already cost $500,000 now if I include the fourth day. I don't know. But that's crazy. We had a $1.5 million month last month, and then we, did another almost $500K in the first 3 days. That's what? But I think it's because people realize they're getting into an asset with essentially, I would argue almost no premium. I mean, to the valuation that we had. I mean, it is no value premium to the valuation that we had at the end of August of 2024. Before we were doing anything with software or otherwise, right? I mean, it was just, hey, we bought some wedge deals and we got too big of a staff. Now we've scaled our staff to where we're perfectly balanced right now. We're great. We just acquired 10 properties, and we're kind of looking at it going, hey, maybe people just want to diversify from where some of the things sit right now. I mean, it was good that we had a nice little rally up this morning but look at the decreasing volume on the trend. This is something you always have to watch, in my opinion, but look at the decreasing volume. It's not unusual to see decreasing volume, as the day goes on, but in order to really keep the pump going, you really need volume to increase, and you couldn't make it to 630. It's not ideal. It would have really been ideal to make it to 630 today. I know it's just a gray line, but that was my test for market liquidity today. Just couldn't quite make it there. Maybe, who knows, maybe we'll make it there by the close. But if we keep rejecting 630, we'll probably tank at the close. I hate to say it, and I'm not trying to be bearish. These sort of short-term money raise, lack of liquidity issues, these are very, very common in the markets. This is where you get like all the perma bulls that are like, oh yeah, pullback is healthy. Okay, whatever. Pullbacks occur when people run out of money to buy. That's all it is. And what, I think it was just yesterday before the pullback, if you watched my video on I think it was, what did I call it? The red flags or whatever, the critical Fed red flags. We talked about the Fed's repo facility and the funding stress in the repo facility. We'll pull that up again in just a moment. Actually, I'll just pull it up right now. That comes on top of what we've seen with the Bank of America Fund Manager Survey, and that comes on top of what we've seen with crypto liquidity. But let's go see the repo operation. So, repo. It's still elevated. Okay, so it seems like we don't get the full chart until the day is over, because yesterday we had a tiny little chart, and it definitely grew a lot more throughout the day. So that's like, I don't study the repo chart every freaking day, okay? It's just only recently that we're looking at repo again because it's been so long since this has mattered. I think the last time this repo market outside of COVID mattered was September of 2019 when I went on the Wolf of Wall Street's podcast to talk about Grant Cardone, which was absolutely hilarious. But anyway, I got fish. Who remembers that? I got fish. Oh, man. He's got fish. Jeez. Oh, my gosh, dude. That was 6 years ago. But anyway, yeah, it's worth knowing that this repo chart updates throughout the day, so it's not going to be done showing you how much how much institutional demand there is for liquidity until basically the next day. So basically ignore the far right stick. Bottom line, ignore that little hump and just look at these big humps right here. And then we want to see, like, especially on a red day like today, is it going to go even higher? If this keeps going, the Fed's going to have this like intra-meeting egg on face shift where the Fed's going to go, guys, we thought we would end up being able to wait until December 1st. We can't wait until December 1st. Oopsies. We'll see, I guess, eh? But anyway, could the New York election today have an impact on Wall Street? Anything could impact the market. I mean, I don't think so, but like not market wide, right? Could it be a small factor? Sure. What happens as the Denny's stock? Yeah, let's see. So I don't know what's going on with Denny's, but I'll find out for y'all. I see you in the chat, want to help out. So Denny's filed a 10Q. So they canceled their Q3 earnings call. Oh, they're getting acquired. Oh, wow. Who's acquiring them? Acquired by Tri Artisan for $6.25 a share in an all-cash transaction. Wow. So they filed their earnings, and they're like, by the way, we're not even going to do an earnings call. F off. We're getting acquired for $6.45. Peace! Good for them. You're going to see more of these acquisitions, by the way. I actually think a real... Oh, yeah, and they've almost fully priced it, right? Because if they're getting acquired for $6.45, it's basically fully priced in. So 645. I mean, they got pretty cheap, right? You know, another one that has the potential of getting acquired. I think the problem is they have a lot of crappy leases. Is Red Robin. This is another one, dude. It has a market cap that is lower than Househack owns in like real estate and cash. We have more real estate and cash. I'm not even talking about like any kind of stock premium or anything. Just literally more real estate and cash than Red Robin has a market cap. If anybody remembers the story of sort of like the start of my career and what got me into real estate, it has a lot to do with Red Robin. So I couldn't be happier. Yeah, let's look at the Denny's 10Q. Because, see, what's actually interesting is if Denny's owns a lot of their locations, that this could be a very smart acquisition. If they lease a lot of their acquisitions, it could be bullish for Red Robin. Man, this is like the kind of stuff we usually do in the course member live streams. I guess you guys are just getting the bonus here. That's okay. I love everybody equally. So let's go look at their balance sheet for a moment. So property net. No, yeah, dude, that's actually bullish Red Robin. Because look at this. They don't really own property. Property net. Wait a sec. Property net. Yeah, no, property net, wait, property net. No, wait, I'm sorry. Hold on a second. I thought it was this line for a sec. No, that's actually pretty good. That's $123 million of real estate, which is they're based on this, they have as much of a balance sheet of owned real estate as they actually have leased real estate. Now, that's very interesting. So, let's go. Here are their margins. I mean, they have a net income of 632. Oh my lord, dude. Dude, they made $632,000 in the last quarter. That's it. 632 grand. Denny's. Bro, what's the margin on that? 632 divided by 113.2 million. Oops. I can't even do the math right because it's so small. Divided by 5,737.75 equals 1.1% margin. Bro. I mean, I don't know. Maybe there's like a big one-time thing over here. But investor relations, Denny's. If you just do a really rapid look at their annual report, we should know quickly how much real estate they actually own. But these companies, they hold a lot of like people don't understand, because like when the market goes euphoric and like Bitcoin goes up to all-time highs and the stock market goes to all-time high, people always dump on real estate. They're like, the stock market outperforms real estate. So real estate is a much slower moving animal, over the long term. And so I always think it's funny when those cycles change. But let's see. Actually, can't get Command F to work on their sheet. Okay, well, whatever. You know what? I guess I'll take a brief little look at it. I'm still enough curious to go look. All right, here we go. Let's just do a Command F for property, and there we go. Property rights. Nobody cares about your property rights. Properties. Here we go. See, look at this. Most Denny's are freestanding facilities with an average of 1 acre. Oh, that's funny. Fun. So if you ever like see a Denny's, you can now like tell all your friends a really interesting fun fact that nobody's going to care about. Hey, did you know the average lot size of a Denny's is 1 acre? See that square right there? It must be about an acre. Occupancy costs. Oh, who told you that dumb fact? Oh, that's some doofus named Meet Kevin. Let's see. Rent, property taxes, depreciation of property. I mean, some of their property is also going to be like equipment that they have. So like, cooking materials, right? Owned property is stated at cost. That's normal. Building assets are assigned 5 to 30 years. Other property. Okay. I wish we knew in an easy way how much land they have versus leasing, right? Property, total consideration paid. That's Keke's breakfast. Property, here we go. Land, buildings, and leasehold improvements. See, they don't separate these out, but this gives you the actual real estate ownership that they have. So actual dirt, they have 43 million of dirt at cost. And then if I take 43 divided by, let's say that's worth about 0.7, so 43 is worth about 0.3. They probably got about 143 mil of buildings. You know, this company, and that's at cost, right? That's, so at cost, which means if this company is getting sold now, what's the market cap of this business? So Denny's is going out for a cap of $318 million. Honestly, this could be a real estate play. Because look at this. Denny's probably has, I don't think that's how you spell Denny's. Isn't it with a Y? I never go to Denny's. Denny's probably has around, 200 to 250 mil of real estate. Right? And you're buying the company for what, like $350 million? So this might be a real estate acquisition play. Red Robin does not own that much real estate. Most of their crap is leased in like dying malls. See, Denny's has the benefit of mostly freestanding buildings, and call it 200 mil of real estate. Red Robin mostly leases in dead malls. Yeah, I hate to say it, but this Denny's play, this is a real estate play. This is smart. I'm actually really impressed. I thought this was just going to be like a restaurant consolidation or whatever, but now that I look at the numbers, I'm like, nah, man, I don't think they care about a 1% margin. They want the real estate, because you could put anything in it now. So now if I look at like their debts, what are their current debts? I mean, I've got long-term debts of 440 mil, total liabilities of 535. Some of that is deferral, not much, honestly. So I got 535 million of debt. And then, I mean, they don't really have any cash. That's the problem. So you're going to still be sandbagged by some of this long-term debt. All right. Well, they see some kind of value there at Denny's. Anyway, so what's going on now broadly? We've got Tesla still down, 2% here. Still recovering nicely. Clearly, some buy the dip enthusiasm. Qs are now flat. NVIDIA's pretty flat at that 2% level as well. That's roughly where we started the day, leveling off a little bit here. Would be nice to get to 630 on the Qs. Bitcoin got all the way down to 102.8 there for a moment. Losing 105 last night was a little disappointing, but it's a little bit of a liquidity sign. So a little aggressive there. Somebody says here, do you think the KView deal goes through? Yeah. I don't see an issue with the KView deal going through. I actually wanted to buy KView until it got this buyout. I mean, what are they buying it out for? Because that's the other thing is I mean, I don't know what the price is that they're buying it out for, but that's going to be your ceiling. So let's see here. We've got, okay, yeah. If the deal doesn't go through, there's like $100 million termination fee if the deal doesn't go through. Can't find it. Kimberly-Clark to buy KView. KView shareholders will get $3.50 a share in cash and 0.146 shares of Kimberly-Clark. So you're going to be upside down on this. If you buy this at $16, you're going to be upside down by $12.50, but you're going to get Kimberly-Clark shares. One Kimberly-Clark share, you're going to get about $14 of Kimberly-Clark shares. So there's actually about a $2 arbitrage there right now, right? So you can make a little arbitrage calculator if you were so inclined to. So I'll show you really quick. I don't know. I imagine some people care about this. I'll do it really quick. So, you know, an arbitrage calculator would be KView is going to be worth $3.50. KMB is going to be worth the stock price of KMB. Okay, times 0.14625. Of course, I don't know what I'm doing with these stupid formulas. How do I do the damn stock formula? Show function browser. There you go. Oh, stock symbol, comma, price. Okay, fine. Comma, price. There we go. No, I'll just take the price. Oh no. Why is it so hard? Don't say it, Kevin. Don't say it. Don't say it. No, don't say it. That's what she said. Okay. I'm sorry. This is supposed to be PG. I can't do it. Whatever. It's $100 right now. Okay. There. And then we're going to multiply this by this level right here. That's your total value. Total value. Now, how much is the termination fee worth if it doesn't go through? All right. So this times this. There you go. So that's the current value that you're getting if the deal goes through. Value received, value paid. Right now you're paying about $16 for the share, right? This is the ARB. So your ARB is the difference between the two. You're getting an arbitrage right now of about $2, which is not bad. You know, it's like 15% or something, right? Roughly, because some of my numbers are rounding. Now, if the deal doesn't go through, that, where's the termination fee? I want to find it to verify it. Termination fee. Oh, I read the termination fee wrong. The termination fee, what's up, Jack? Is actually 1.14 billion. I honestly read it as like 114 million, but now I'm looking at it closely. You had a jacket on today. A Hewitt.
I put it on. I had it on yesterday also.
Oh, I didn't remember. It just doesn't say reinvest. Or do you want the house hack one? House hack, okay.
I like house hack better.
You like the house hack name better?
Yeah.
Okay, all right.
Bye.
See ya. We'll put that on your car.
Okay.
All right. All right. So the termination fees of $1.14 billion. So how many shares are outstanding of this puppy? KView Investor Relations. I don't know. You could get any kind of filing here. It doesn't really matter. All right, here we go. I'll just take a filing from a press release. Oh, Q3 filing. Shares. So how many shares do we have outstanding? We have 1.9 billion. So the termination fees worth what? 1.9 people, or sorry, 1.4 divided by 1.9. Termination fees worth like 73 cents. And that's, 73 cents per share roughly. Right. So, and then you're just stuck with the KView. It's not bad. The risk there is that Kimberly-Clark keeps going down. Clark as a consumer staple. Oh my lord! Look at the tank on Kimberly-Clark after their. I thought they said cash. KView deal has more than 80% of consideration in the form of cash. Oh, they're diluting shareholders over here. So that's why. So you're using shares to buy. Yeah, that's interesting. But then also, look at where Kimberly sits now, I mean, look, you're so low below the 200-day moving average. In fact, I could probably draw, a funky little uptrend on this puppy. And let's see what this sucker looks like. So, just roughly speaking here for Kimberly-Clark, I mean, this is a trend line that goes... We didn't even get this low on COVID. We didn't touch this trend line on COVID. We touched it at the end of 22. So, I mean, for what it's worth, this is only really a 2.5-ish point trend line. But, yeah, that's interesting. Now, what's the dividend on Kimberly-Clark? Dividend... Do they have a dividend? 5%, bro. That's nice. I mean, it's a consumer staple. Maybe, you know, they're going to get hit by tariffs. Maybe you don't really care about that. Like, I could get 5% investing in House Hack, too. I'm just saying. 5% on Kimberly-Clark. If you want Kimberly-Clark shares. No, is there buy the dividend opportunity? How much did they just tank yesterday? I mean, they were trading for 117. They dropped like 17%. I guess it'd be like 16-ish or whatever. But whatever. Okay, cool. So, how are we on the Qs? Let's see here. Qs. Yeah, it's just not going anywhere right now. We're really, really stuck. You got a little bit of momentum there. And Palantir's got some recovery. I mean, you were down as much as 10% on this puppy. All right. New York City to decide if socialists will run the Capitol. We saw the Burry puts. Amazon says Berkshire Utility failing to power data centers. Doesn't surprise me. These data centers need so much freaking power. You're just gonna overload the utilities for now. NVIDIA emerges in the race to get robo-taxis humming. Right. Well, I mean, but they've been saying that for years, too. So there's a little bit of work to do there. Amazon alleges that Berkshire Hathaway-owned utility in Oregon is failing to provide enough power. Amazon lodged a complaint with the Public Utility Commission of Oregon, alleging that the Portland-based Pacific Corp breached obligations to provide sufficient power. Yeah. Well, that's... utility drama. Okay. Somebody here writes, hiring freeze at Microsoft from what I've heard. Wow. Ally Financial is cutting jobs again for the second time this year. Car repossessions at all-time highs. Wow, is that true on Ally? Yeah, Ally is definitely going to be a little more of an at-risk lender. Ally layoffs. Yeah, you're right. Good call. Look at that. We've got Ally Financial cuts 2%. Oh, my Lord. Just get rid of all this crap. There we go. All right. Oh, become a member. Oh, okay. All right. I'll just go over here. Ally. Cutting approximately 2% of its 10,000 person workforce. Okay, so 200 people. Mostly at the manager level and above. The white collars. Clearer structure with increased managerial spans and consolidated activities. Right. In other words, AI, bro. Somebody writes, I'll see everyone at the food bank this month. Oh, no. And then there's a headline that just came through on Reuters. Bosch, we can implement furlough measures of 650 workers at Ansbach site if needed. Wonder what they're yapping about. But anywho, Netflix is almost back over 1,100. Nice little smidgy recovery there. Smidgy. Tesla, Palantir, NVIDIA. NVIDIA's still doing a little bit of a bleed here. Q's still bleeding a little bit. Okay, good. So, hiring freeze at Pepsi Frito-Lay division until March 26th. Wow. Yeah, that is going to be interesting. Where, like, the problem is where do the people without the jobs go? That's the biggest concern. I was going to look at the jobs data. What's this? Alternative data signal decline in U.S. job openings. Okay, right. Well, I mean, that sort of aligns with what we're hearing in the news, but Let's see what they're talking about, as well as let's look at what the ADP expectations are tomorrow, because that's going to be a big deal too. I mean, that's actually probably the biggest near-term deal here. All right, so let's jot some of this stuff down. Denny's versus. I'm going to also quickly make a note that I believe Denny's likely has around 200 million of land and buildings on balance sheet. This could have been a real estate play for Denny's, with standalone buildings averaging an acre lot. Very desirable for other restaurants. Unlike Red Robin, whom I believe is 80% leased in mostly malls, many of which are dying. All right. Okay. So we're going to make that little note there. Then Denny's, we saw the price over here on Denny's was $6.45 transaction price. I'm just going to write that note there. I want to make sure I get it right. $6.25. Okay, good thing I checked. So Denny's to be acquired by Tri-Artisan at $6.25 a share. And then K-View getting acquired for, let's just copy and paste the number sheet so you have it. We've got $3.50 a share for K-View and about a 73-cent per share termination. Okay. Approximate 73-cent per share termination fee. And then K-View shareholders get $3.50 plus 14.625% of one KMB share per K-View share. Cool. All right, cool. And then now let's look at jobs data. Datter. So the forecast for tomorrow, we didn't get JOLTS. Wow, it got revised up. Okay. That's good. So that's bullish, actually. Let's go see here. I like to see that, though. Bullish revision up. Estimate for ADP was 35K last week. Now sits at 40K for tomorrow, which is great. And then where was this complaining about jobs data? Let's find out. So alternative jobs data. There we go. All right. Government shutdown is preventing the release of the JOLTS scheduled for today. Okay, great. JOLTS delayed today thanks to the shutdown. We're going to get so much data when the government reopens. Alternative data suggests demand for the labor market continue to slide. Okay, so the Doomers suggests alternative data indicates a slide in openings in September. Oops. Okay. Moreover, daily and weekly measures suggest vacancies and October. I mean, I don't think anybody's surprised to hear that. A decline of that magnitude would push the ratio of vacancies further below 1. As of August, the last month we have data, we sat at 0.979. JOLTS ratio, unemployed to, actually it's jobs to unemployed, was 0.979. in August. Okay. Vacancy rate has normalized. Job openings rate. In other words, it's stabilized. I don't know that that's normalized, but okay. Yeah, and then the question is, how does this curve end up? This is actually a very cool chart on the curve. I'll show this in just a sec. Vacancy rate is normalized. That's fine. Beyond a decline in job openings and increasing slack, we expect JOLTS would have shown a decline in quits. Right. Who wants to quit right now? Workers are becoming more concerned about their ability to find a new job. Yes. Layoff rate still low. State claims data showed a spike towards the end of December. End of September. Interesting. State claims did indicate spike towards the end of September. And then obviously, the layoff announcements in October may weigh on future data too. Somebody says, what the F is up with Amazon data centers? Is that a sign of things to come with AI? What do you mean? You mean like the AWS outages or what? Or licensing to OpenAI? Anyway, let me show you this chart. This is actually kind of cool. If I can get the darn thing to open. May the Lord open. What's that? That was from, what was that show? Oh, Handmaid's Tales. That's right. Okay. Come on, buddy. Why is it so hard sometimes to put a screenshot in? I don't know. Just nothing happens. I take as a screenshot. I push open. There we go. Got it. All right. So, vacancy rate is normalized. Actually, you know what? Let's mark this up and showcase this a little bit, because this is how you create the beverage curve, whatever you want to call it. So we sit here, okay, and the job openings rate, as long as it somewhat stabilizes, fine. The risk is an increase in layoffs, right? So what we're seeing right now, and that's always been the case, but let's drop this down. So what we're seeing here is a stabilizing of job openings right here. You don't want that to go down much more. The more it goes down, the more likely you are to push to the right. And if we get, if openings are stable, the only thing to push us to the right, which would be rising unemployment rapidly, would be layoffs, right? That's pretty straightforward. Let's see here. So we'll make a little note of that. There we go. Okay, cool. So we'll slap that on there. Alrighty. So that's, I don't want to say fine, because it's still a problem. But again, none of this seems cliffy. That's the big issue that you're going to get with the data tomorrow is, well, maybe it's not an issue. Maybe it's a good thing. Are we really expecting some kind of like crash tomorrow on ADP? I mean, it would have to miss by a lot. I mean, let's look at the standard deviation for Joel or the ADP data tomorrow. So standard deviation is going to be like 15,000. So you'd have to miss by like 3 standard deviations to go negative. Oh, yeah, you're talking about the Amazon, the Berkshire situation with getting power to come online. Well, yeah, it takes time to build out, the appropriate power. That's exactly, if you listen to the Satya Nadella and Sam Altman interview, that's exactly what Microsoft complains about too. So we don't have, it's not that we don't have the chips, it's that we don't have outlets, basically, that are hot. He calls them warm racks. But yeah, that's fine. Oh, standard deviation's 26,000. Median estimate is 40K. I mean, the estimate is This is pretty noisy, honestly. This is not really that great of an estimate. I'll show you. Give me a sec here. ADP. This is all over the place. So I don't know how useful the standard deviation measure is for this. ADP measures all over the place for tomorrow. I don't actually now put that much weight on this number at all, because I want you to see how diffuse these are. Look at that. I mean, am I crazy? But dude, there's no consensus here. I got 3 economists at negative 20,000. I got 2 at negative 12. I got 3 at 60. Yeah, I got 5 at 48, and, 3 at 44, and 2 at 40. So, we're getting our average at 32, which you can see the center of the bell curve. The median is 40. But I think this is less of a foregone conclusion here that this is definitely going to be good. And if people are only reading the headline number, people might be going into this thinking, oh, this is definitely going to be a good report. But this is a sign to me that nobody has a freaking clue. Nobody has a clue what ADP is going to show tomorrow. Well, that's not great. Okay. All right. Q's kind of rolling again a little bit. Oh, Netflix went green. Holy smokes.
Gained the lead.
Ugh. All right. Let's see here. Nvidia, we saw this. Okay, Jolts, Amazon. And then, yeah, there was a lot of news about the Burry short, which obviously he's going to be happy about now, but the amount of running that it did into earnings, I don't think is going to be great. So this was the Burry short, and this was posted, this was their last 13F, which presumably would have been the end of the quarter, right? This would have been September or whatever. So he'd be massively down on some of these. He has a call on Halliburton. He's got stocks, shares of Lulu. Dude, shares of Lulu have gotten destroyed. I keep trying to get Lauren to tell me that I could go buy Lulu stock. And she's like, no, Kevin. It's dead, bro. It's dead. And I'm like, all right. And I'm like, well, why? Like, doesn't it have good stuff? And she's like, Kevin. And then she'll, like, rattle off. I can't even think of it. All these other brands that are just eating Lulu's lunch. And I'm like, oh, all right. Very well. We just need to create a shorts company. It's like short hack. Like shorts. Meatshorts.com. Get your meat shorts. Protect your meat with meat shorts. Yeah, that's what we need. Anyway. Okay. Yeah, anyway. So these are the Burry positions. Which, this could be full value leveraged up by the options. So I don't think I'm not convinced that these are this person wrote that these are 5 million put contracts, which would imply 500 million shares. I don't think so. Hedge fund is concentrated 8% of its $1.3 billion portfolio put options. Yeah, I think these values are the the notional value of the underlying shares that could be exposed. People usually screw this up, but I'll have to fact check that. So, but yeah, I mean, boy, if you disclose these on September 30th, you've actually gotten hosed quite a bit, you know? Because, I mean, what's Palantir done since September 30th? Up. September 30th is right here. You know, so since, well, let's go to the day chart. Since September 30th, we closed at 180. So you're still upside down on those contracts. Same on NVIDIA. You know, NVIDIA is higher than it was on September 30th. Oh, did the homie tweet again? Man, gotta love it when the knucklehead comes back to tweet. Oh man, everybody's talking about meat. Eatmymeatshorts.com. Meet Jose. Eatmyshorts.com. Spandex pants. Wow. Yeah. All right, so let's jump into Cassandra. Ads. Oh, it was just this bubble talk, right? Move along. The capital cycle ends with a shakeout. By 2002, it was commonly reported that less than 5% of U.S. telecom capacity was in use. Wholesale telecom prices fell by more than 70% in 2001 and 2. Many of the companies, which had not long before been valued at huge premiums to their invested capital, now sought protections from creditors. Right, it's a debt bubble. That's essentially what he's banking on here. So, and then making these charts about sort of year-over-year growth rates declining, is actually comparing the growth rates of the cloud segment in 2018 to 22. So that's what, 18, 19, 20, 21, 22. That's a 5-year period to the current 4-year period. And arguing that year-over-year growth has matured, yet stock prices are essentially skyrocketed. I'm glad I could still see his post, given that, I have personally been blocked by Michael Burry. What did I complain about? I think I eggplanted him. That's all I did, dude. All I did was eggplant the guy, and I got blocked. I'm like, man, sensitive much, bro? Like, he had a post, and I responded with the eggplant emoji. Blocked. I'm like, whoa. Whoa there. Whoa there, big guy. Whoa, whoa, whoa. Anyway. All right. So, Q's slipping again. Look at that. We could not make it to 630. Could not make it. All right. So, let's see here. Oh, here, let me read this. Okay, Burry. No. Okay. That's fine. Always coming back again. All right, let's see. The fate of the global stock rally has a lot to do with China. Strong money growth and deflationary economy in China are generating significant amounts of liquidity. Well, that's good. In excess of the needs of the economy, which could be available to support risk assets. But with few domestic opportunities for capital, liquidity is leaking abroad in hot money outflows. Sure. Yeah, you need the money here. We'll take your liquidity. Interesting. The problem is that this is actually a very interesting argument. That's actually very interesting. Okay, so watch this. So what they're arguing here, I'll give you my little distillation, all right? So, Doomberg on Chinese liquidity. Mind you, Kevin on liquidity. Oh, I should get the Bank of America fund manager survey. Let me grab that really quickly, because this we've talked about before. Is the FMS. The FMS, bro. Just look up the FMS, yo. Yo, what's the FMS say? The FMS, bro? Oh, I'll look up the FMS for you. Yeah, I'll get right to the FMS. The flight management software? Nah, bro. The fund manager survey. Oh. The one by Bank of America and Mr. Hartnett? Yeah, that's the one. Okay. All right. So I need to find out where cash is. Ah, here we go. Cash, 3.5%. That's mega low. 3.8 was, I'm pretty sure they're a rule here. Yeah, global FMS is still below 4%, still in contrarian sell territory. But once they get under 3.8, that's when they say it's a hard sell. Table what? 3? No, that's not table 3. Table 3. Well, that's chart 3. Where's table 3? Chart. Charts and tables. Chart. Charts. Chart. Table 4. Yo, what the F? Am I losing my mind? Oh, there's table 3. Yeah, there. So cash. Buy when cash is above 5%. Sell when it's below 4%. We're at 3.8 for the current reading. Yeah, but in one of the last FMSs, they were bitching about once it goes from 3.9 to 3.8, it's bad. This is my what is this? This is my copy of the Phenom 300 PDF that came up, because there is literally an FMS in aviation. So when I did a search for FMS landing, disagree, takeoff disagree, it is the most annoying CAS message. Like, I think, I don't know, 30 times I've gone full throttle on the damn plane, and then boop, and I'm like, what? Because then you might have to abort your takeoff, and I'm like, FMS disagree. It's just like, disregard, we're going flying. Constant. Usually happens if you taxi too long, your fuel calculations off by like a gallon or whatever. It's so annoying. Anyway, FMS. FMS. I want the last fund manager survey. Maybe the one from October 14th. Aha. There it is. A sell is triggered when cash fell from 4.2 to 3.9. FMS cash level at or below 3.7 is a hard sell. Aha! We have finally found you. Hiding under the floorboards. Ah. All right. Close that. And this is the more recent survey right here. All right. That's the lady screaming in the background of the cockpit. But yeah, it's the same system. That's it. Cockpit Karen. That's what I call her. Apparently, the industry calls her Bitchin' Betty. I mean, that's clever. That's cute. But I like Cockpit Karen. It feels a little more millennial. Like Bitchin' Betty. Like boomers use Bitchin' Betty. There. Kevin uses Cockpit Karen. I like that. See? KKK. Oh. Okay, never mind. I'm just going to stop talking about that. So, let's go to here. So, this is the Bank of America Fund Manager Survey. And, Bank of America Fund Manager Survey suggests we're at 3.8% on cash. That is a liquidity issue, and then I'm going to talk China. The 3.8 under 4.2 is a sell, is what they said, right? What did they say under 4.2? They said 4.2 is a sell, and then 3.7 at or below 3.7%. Oops. Ay. Is a hard sell. Their words, not mine. Okay, so Doomers on Chinese liquidity. Now, this is one hell of an interesting perspective. They say that they argue Chinese M2 money supply increases are leaking into U.S. stocks. However, if China controls this capital better, or China grows more out from their hole, then assets might stay in China to buy Chinese assets, which is considered a risk for risk assets in the United States. So in other words, AKA, the better China be doing, the less. All right, good. So remember, by the way, you can get those little charts and the data with my commentary on it in the totally free Meet Kevin app. So if you grab the Meet Kevin app, it kind of looks like this, like on your iPad or your iPhone or whatever. You could grab the Meet Kevin app and you could see this stuff, with my notes and commentary on it. And you could use the app for free. You can also get the Daily Wealth tab, Alpha Report and Stocks tab. Those are for course members, where we put our stock fundamental research and of course our Alpha Reports every day. But you could get the other tabs totally for free. If you don't want to use an app to get the Daily Wealth, which I put effort into that every day. There's no AI. You could get that at meetkevin.com/data. Meetkevin.com/data. I briefly looked at somebody else's Patreon newsletter or whatever that they do. I don't know if people are trying to model after the Alpha Report or whatever. But I found somebody and they were literally using AI every morning to just GPT you a summary. And it's this long ass thing you got to read. And then I'm like, holy smokes, bro. It's all GPT. First of all, what am I paying you for? And I'm not. It's a sample. Well, what would somebody pay you for if you're just doing a GPT summary? That's lazy AF. A, it's lazy. B, what do I need you for? And it was just remarkable to me. I don't want to read your AI slop. So I'm not, that's not to be bearish on AI. I'll use AI for stuff. Sure. I mean, everybody should. There are things you should use it for. There's no shame in that. But all this stuff I write in my Alpha Reports or my stock fundamental analysis or my data tab, I will go out of the way to say if we used AI for anything, because A, it's so rare, and B, I actually think it deserves an asterisk. There should be a little asterisk anytime something is Gen AI generated by a chatbot or whatever, because it's I need to go verify that now. What if it's bullcrap? Then you're building on hallucinations, right? So anyway, Q's slippage. So, all right. So what else do we have here? MSFT, Netflix. Netflix can't hold on. Dude, we couldn't hold it, man. This is a liquidity issue. This is exactly what we talked about this morning as well in the Alpha Report. And we set up a test today. We said we have a test today, and if we don't meet the test, it's bearish. And so far, we have failed. The market failed. So we shall see. But look at that bleed on Restoration Hardware, man. Down we go! Alright. So, let's go, I'm actually surprised it's taken so long to go to like a news page here or whatever. Videos on the first page is unnecessary? Well, make your own app then. He's like, why do I have to click on 4 things? You don't have to click on 4 things, bro. So the app opens up, you get videos, you know, the historical videos or whatever. And then if you press the data, which here was the red flag on liquidity yesterday, all you have to literally do is press data. It's not that hard, homie. What you bitching about? You got 1 extra button to press. 1 extra button. You know, maybe what we could do, it'd be kind of cool, maybe in the future, if we, in the hamburger menu, gave you an option and it says, like, default to data page, right? Or default to your task hack or whatever. I mean, that's not a bad suggestion. But it ain't 4 clicks, homie. It's 1 click. That's, you exaggerated that by a factor of 4. It's a lot, my friend. That's a lot. All right. So, let's go see the news. All right. Somebody says, Kevin, do you view Bitcoin as a safe haven? Dude, no. First of all, I want to read what you're saying, but this douchebag, casual in random, you're banned, dumbass. Literally comes in here, spams the same comment, what, 20 times here or whatever? Something about some stupid ticker. What a spamming jackass. Anyway, Kevin, do you view Bitcoin as a safe haven? No! It's not a safe haven. Anybody who tells you it is smoking crack. It's a risk asset. That's all it is. That's it. That's it. All right. Thanks for picking up your order. I didn't pick up the order. Yeah. Definitely, exclamation mark. Love the hoarder homes, period. Is it the River Park one, question mark? Cool. Ross keeps telling me, Kevin, stop buying. You bought so many homes. And I'm like, Ross, I can't help myself. The deals are so good. It's like, Kevin. All right. What else do we have here? How do you invest in house hack? Somebody says. Oh, well, I'm so grateful you said. You can go to househack.com or reinvest.co and read the solicitation. There's actually not much more. It's actually really easy to invest. Like it's like a few buttons. It's like scary how easy they make it now. So, let's see here. Waste management. Well, it's a staple, that's for sure. I haven't looked at their funnies in a while. Kevin, how much just for the alpha? We don't do that. You know, we don't parse out just the alpha report. You get a bundle of everything. We tried, and the market, like people don't. What we have found is people don't mind doing the pay in 4. They pay a little bit more for pay in 4. Like if you pay full price up front, you pay once and it's done forever. But people don't like the recurring fees. So like I don't like it either. I'm not a big fan of monthly payments. So you know people like pay once and done. I think did we quietly? I think we quietly put up a coupon code NVDA because Nvidia earnings are coming up. I wasn't gonna start talking about that, but I think that's. Let me see. I don't know if that's up. I think that might be up in the background. Because NVIDIA earnings are in like 11 days or something like that. So I think it's coupon NVDA. You could try it. I don't know at meetkevin.com, but whatever. I don't know if that's up yet. Anyway, so let's see what we got here. U.S. Steel says Japanese ownership to unlock $3 billion in value. Kevin, how's the membership work as a refund for tax or credit? Bro, if you got to ask that question, man, we got some tax work to do. Okay. And we don't have enough time to start teaching right here in a live stream on the news how tax deductions work. But basically, the way it would be tax deductible would be against profits for education on trading, either trading profits or real estate profits, or business profits. Like if you're a salesperson, if you're trading, hustle income through real estate, investing, stock investing, trading, business, sales, property management, YouTube, you know, whatever you could justify, because you get all of that in the same bundle. You know, that's what you're trying to write it off against. But no, you don't have to be like a full-time trader with an LLC or whatever. It depends, like, what are you using it for? You know, maybe you're getting the Alpha Report and you want the real estate analysis. Write it off against that. Or you have a YouTube channel as a side hustle. You write it off against that. Remember, you can write off expenses for a side hustle to the extent that you have income in a side hustle, right? Anyway, so Uber misses on profit, even as rideshare and delivery soars. Fed's wait-and-see approach can't last. Yeah, no kidding. By Clive Crook. Bro, dude, what kind of name is this? Clive Cook. Dude, I feel like this guy's gonna, like, sling a revolver at me and shoot me. Clive Crook. CC. C squared. Crooked. Dude, he's got a thing called Crookonomics. Wait, is it? Oh, no, it just glitched. Oh, that's funny. It just, the text just glitched. That'd be funny. Crookonomics. It didn't even say that. All right. So, financial markets are obsessed with AI. Your mom's obsessed with AI. The broader public is aware of the looming impact of jobs and wages, yet the Federal Reserve, the concern is barely registered. Oh, who was the lady who finally woke up yesterday? There was some, and I'm not talking about going woke. I'm talking about woke up. Is that the same thing? I don't think it's the same thing. But, let's see here. Where is it? 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 Ah! Daily. 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 Fed's Daily says if you wait for the job market to report weakness, you're already behind. Let's go, Daily. Mary Daily, you rock. Good job, woman. We appreciate you. All right, so this isn't because policymakers think AI doesn't matter. It's because they have no idea how its potentially vast repercussions will play out. Duh. Nobody knows. Last week, Amazon cut thousands of corporate positions. NVIDIA climbed to $5 trillion. Not doing much hiring or doing layoffs. At the time they're talking about AI. That was about it. AI's already had conflicting macro impacts. Massive outlays of power, as we're seeing with the Berkshire Oregon company. You've got problems around this. If these disturbances have no clear implication for monetary policy, bubbly stock market, and elevated spending on AI raise demand and call for higher interest rates. A sluggish labor market suggests the opposite. Yeah, do not raise rates. If you have an audio problem, just press these buttons. If you're on a Mac, Command R. If you're on a PC, Control R. And if you're a hater, use Alt F4. All right. Now, before long, the stance will be hard to sustain. The effects of AI. AI could be a big deal or no deal. It could be a bad thing, could be a big thing. Small impact or large impact. Okay, this is boring. Unsurprisingly, expert opinion is divided. Right. What's our star? The neutral. Getting things right is tricky. AI revolution. Oh, man, this is boring. All right, here we go. Lower wages, higher unemployment, and rising inequality as the labor force divides between workers empowered and disempowered by AI would pressure the Fed to do something. But what? The only policy is short-term rates. The Fed can always engineer higher inflation. It can't raise real wages. Correct. Can't help you find jobs. The Fed is not designed to help brokies. Sorry. That's what it is. The Fed's designed to help rich people. That's it. I hate to say it. This is what it is. Another plausible bad effect is great price-raising power for technology leaders and early adopters. As with collapsing demand for labor, this isn't to be taken for granted. In the end, an open-source AI system might emerge. This doesn't matter. Economic prospects hinge on how this turns out. The Fed can only stand and watch. Right, but like they say, for now. Okay. Then, so short-term macro management is squarely in the wheelhouse, but its difficulties can't be confined to ambiguous retail signal. Okay, what else? Economic signals. Same goes for financial. Once they are guided by models trained on history and opaque to human judgment, radical novelties such as AI could throw them for a loop, causing bigger, faster, self-reinforcing errors. The next crash could break error records. What? If supply chains are designed to be managed by AI and fail because of shocks not previously encountered, the technology could make things worse. There'll be fewer humans to put things right. The same goes for financial markets. Once humans are guided by models trained on history and opaque human judgment, the next crash could break records. Wow. Basically, like an AI doom loop. Okay, call me an alarmist, but the tweaking of the federal funds rate will not suffice. Handling these possibilities demands smarter policy across a wide front. Strong safety net to cushion the blow for displaced workers. Okay, fine. If things go badly, the Fed will doubtless get more than its fair share of the blame. But the truth is, AI is too big for any central bank to cope with on its own. The technology calls for politicians willing to think hard about these challenges to face them. Let me know if you see one. Yeah. One comment. Dude, is this going to be mean? Oh. Crookonomics. Oh, I'm not signed in. No, I don't want to sign in. All right. What else? Somebody says one comment, read it. Okay, let's see what the one comment is. AI is much bigger than the Fed. A president and Congress will have to do some sort of... I don't see AI as a replacement for a worker consuming much food, clothing. How will that affect the economy? Will AI pay taxes? Will governments and social... Yeah, just wondering. And his name is Nightmare. Interesting. Bitcoin just lost 103. Elections this week will show how unpopular Trump really is. It's The Economist. Xi Jinping strengthens ties with Russia. This is literally the MO. I keep saying this on my channel, and people get mad at me for saying it. But this is exactly the point. The stronger China is with Russia, and the more they can kick the can down the road on tariffs, the more, how would you put it, the weaker we become, right? Dating yesterday. You're asking somebody who's been married and with the same woman for 17 years what I think about dating apps and whether they're dead. I gotta appreciate the $5, but homie, man, I don't freaking know. I mean, look at the revenue decline. Is the revenue going up or is it going down? I mean, I don't even want to get the financial statements. I'll just be a lazy bum over here. I'll type in match. I'll go over here to the little dollar sign. I'll click on match. Look at the income statement. I'll compare the revenue. Q1 to Q2, the revenue actually went up quarter to quarter. Year over year revenue, you're flat. So if I go to the annual reports, we grew, what is that? 3.41%. So slow growth industry, right? How's their income going? Well, let's go back to quarterly on the net income side over here. Net income, fell in Q2 about 9.8%. Seems like Q2 is hotter than Q1 for them, huh? Interesting. Oh, because you get into summer months, maybe. Is like dating seasonal? I don't know. Maybe dating is seasonal. Who knows? I don't date. I can't know. All right. Russia has grown economically dependent on China. No, and China loves it. You know, because we're affecting our relationship with China. Whatever. And that's what people are like, oh, but China dumps on us because they manufacture stuff better and cheaper. Is that not capitalism? Is it not capitalism to get stuff cheaper? Of course it is. Anthropic projects revenue, 70 billion in revenue? Oh, for 2028. See, that's the thing. These people have to go out so freaking long. Oh, you're married to myself, just curious on the financials. Oh, yeah. I don't know, man. I mean, we can look at it in a sec, but look at this. Anthropic hiked its most optimistic growth forecast by roughly 13% over the next 3 years. Yeah, but you're having to go out. So this could all be fugazi. You know? They're at $5 billion this year. They think they're going to 35... What is this? 70 divided by 5. 14. They think they're going to 14x, man. I don't know, man. That are very, very high quality products. Look at Insta360 cameras. Those are all Chinese products. And to suggest that they don't manufacture well is to be blind. That's to be blinded by your bias of the past. And that'll just end up hurting you. All right, so there's nothing really new. New World Order. The New World Order. Oh no. No. How are bonds doing today? I mean, I bet you there's some flight to safety here. This is all going to be about election results. Yeah, Plan B on tariffs. We don't really want to hear a Plan B on tariffs. But the Supreme Court, I don't think, is going to make a decision for months on the tariffs, by the way. The IEEPA tariffs. They won't make a decision on this until like February to April. I'd guess closer to like April, maybe even May. But yeah, I mean, they'll just move to a different section of the you know, codes, essentially. Did Trump start yapping again? Let's see what Trump's up to. Donald Trump, don't be a panicking. Buy the dip. Let's see here. What was I gonna do? Truth Social. SNAP benefits increased by billions and billions of dollars during crooked Biden's term. Haphazardly handed out to anybody asking for them, will only be given when radical left Democrats open up the government, which they can easily do and not before. Thank you for your attention to this matter. Nice. So there's, I feel like that's a little bit of a flip because they said they were going to give half because they were ordered to by a judge. So I wonder if he means the full set or any at all. I'm going to have to close my door in a second here. I hear crying. I hear sadness. Let's see here. UBS chair warns of looming systemic risk from private credit ratings. Yeah, I could see that. QZ-doos. Yeah, still bleeding, by the way. Still bleeding. Nobody knows a good bleed much better than Palantir. Palantir's got a little bit of a bleed. A wee bit of a bleed. Nvidia is almost down 3%. Oh my god. Alright, I gotta close this door. Damn it! Here we go. Silence! Silence! I kill you. Who remembers what that's from? Ahmed, the dead terrorists. Dead terrorist. Ahmed, what killed you? Premature detonation. So bad. So Kevin's mad he had to roll 2 inches. Hey, okay, hey. 2 inches is a lot, okay? It's not about the length. All right. Ratings arbitrage. Okay, growing chorus of voices pointing to multi-trillion-dollar industry with opaque disclosures and illiquid private credit loans. You're seeing now is a massive growth in small rating agencies checking the box for compliance. Uh-oh. If you look at the insurance business, there's a looming systemic risk coming through because of the lack of effective regulation. Smaller rating agencies captured market share in private credit by providing so-called private letter ratings, which are typically only visible to select investors and the issuer. Oh, wow. They're not even using the big agencies anymore. Are you kidding me? U.S. life insurers, which must hold a certain amount of capital and investment-grade assets, have been the biggest buyers of private credit and private letter rating services. Oh, great. The ratings have come under additional scrutiny. That's how it works. You know, once some of the cockroaches come out, everybody starts going, crap, double check the books. Are we exposed? I mean, you would be dumb not to check your exposure right now because you don't want to be left holding the bag. UBS chair also launched a broadside against Switzerland, saying the country is losing its luster because of competition from Singapore and Hong Kong. Switzerland is facing a crossroads. Trump administration hit Switzerland with tariffs. Swiss are having an identity crisis. What was that meme song from, was it college? Who did it? I've got large amounts in Swiss bank accounts. I think that was Mitt Romney style. Wine and cheese, Mad IV degrees. Mayor's assassination reignites Mexico's debate over confronting cartels. Maybe we shouldn't fight the cartels. Major Tesla investor rejects the Musk deal. That's the Norway Sovereign Wealth Fund. Old news. Okay. Every family needs a code word? Oh. I don't even want to know that. What's going on here? Trump officials torpedoed NVIDIA's push to export AI chips to China. Trump wanted to discuss NVIDIA chips as they prepared. Top officials said that would threaten national security. Yeah, well, that doesn't surprise me. All right. What else is going on? Let's go see the Doomers. Doomburger. First Brand sues founder. Dude, the founder, he was the guy with the mansion in Ohio, right? Dude, I'd love to see this lawsuit. Where's the complaint? 35-page document. That would be amazing to see this. Well, what's the guy's name? I'll look it up. First Brand sued Patrick James. The guy with 2 first names. Okay, yeah, that's going to be easy to look up. Search for a case. Why? What is this crap? Log in. Federal court. Where do you want to go? Case locator. You know, they're going to make me pay for this again, aren't they? Case title, case filing, prior month. I want party. Hold on. Advanced party search. Here we go. James Patrick in the last month, assuming it's in federal court. And ooh, this could be it. But this was filed on the 19th of October. Okay. Patrick. Let's see if I can get it. Document. Download. Download documents. 20 cents? That's a short complaint, if that's it. I think that's just the cover letter. What? They charged me for your selected document is no longer available? The hell is that? Okay, let me try the other document then. Run query. Amended complaint. Oh, that might be why. Okay. View document. 70 cents. All right, I got it. I think. If this is the right one. Yeah, I found it. Yes, we got it, boys and girls. We got it. Leave it to your boy, Meet Kevin. Leave it to me, Kevin. First Brands lawsuit versus CEO. Oh, yeah. Let's see what they allege, because it actually has some potential implications for private credit as well, right? Judge Pamela Barker. She's going to bark some orders at us. Nobody knows how to bark better than Pamela Barker. All right. Plaintiffs were employed by Patrick. Wait a sec. I don't know that this is actually the lawsuit. These are security guards. Dude, I want a security guard. Like, these are badass security guard names. Livingston and James Booney. Oh, who are your guards? Livingston and Booney. Okay. So what is this? This is yeah, he's the First Brands guy. Private security officer providing personal protection. No. I wanted to see the First Brands lawsuit. This is just a wage claim. Darn. All right. Well, everybody's mad at the First Brands CEO. All right. Well, how did the Doomers get it then? First Brands sued the founder for allegedly misappropriating hundreds of millions of dollars from the auto supplier that collapsed into bankruptcy. Lawyers allege that James borrowed funds on fraudulent terms only to routinely and regularly divert the cash for himself and his family. Ah, freaking scumbag frauder. Oh, it's in Southern District of Texas. Dated November 3rd. More than $700 million was funneled from James to his entities over 7 years. Wow, dude, almost $1 billion. James secretly pilfered some of the company's assets to fund his family's lavish lifestyle. Whoa. Plaintiffs drew data from more than 7 million documents. In a 35-page complaint, lawyers paint the picture of his 17 exotic cars and a celebrity personal trainer. Wow. In some cases, payments were made directly from First Brands accounts, including at least $3 million in rent. Whoa. Paid over 2019 to 2014 for a New York townhouse, $500K for a private chef, $500,000? Holy crap. Freeze any and all assets belonging to James. James, who had a low profile until the the First Brands collapse. Wow, he's the cockroach, allegedly. They deny it. Separate court filing. Lawyers for James said that he categorically refutes. Independent examiner. Siphoned away. Lawyers for First Brand highlight one example of a package of invoices submitted to Katsumi Global for factoring. The documents had been tweaked to show net values and purchase prices higher than the original value given. Uh-oh. As a result, the factoring company purchased a package of invoices at a cost of $11.2 million when the true value was $2.3 million. Wow, I mean, it's just straight fraud. Just pure fraud. James also allegedly pocketed proceeds from financing from special purpose vehicles. Wow. Investigation showed that more than $1 billion of financing, more than $200 million, of more than $1 billion, $200 million was paid to James. Wow. That's 20% of all the funding. James induced third parties to lend to First Brands, irrespective of the financial condition. At the time of the bankruptcy filing, the company had $6.1 billion in debt, $2.3 of off-balance financing. Wow. Nice. Wow. Somebody says Bitcoin Black Friday sale, 18% off. You know, what's interesting is there was a, CZ was tweeting about Panic, which I thought was so interesting because, you haven't actually seen that much of a fall in, like, at least Bitcoin, and maybe some of the alts more. But if I go to my X profile, I thought this was very interesting. CZ of Binance, people are in pain. Bitcoin's off 13% from all-time highs. So I wonder what alts he's referring to, but he says lots of random FUD in the market. People are in pain, jittery, and anxious. And that's like, bro, you're not that far off all-time highs. And if people are in pain from investing in alts, I mean, they're alts for a reason, right? But whatever. Oh, boy. Ooh. All right. So, it's almost time for more coffee. All right. What else? Is the repo facility updating? That would be kind of cool to see. I bookmarked repo. Make my life a little easier. No, yeah, it's just not going to update until tomorrow. That's reasonable. Okay. So now, what else do we have? We did Economist, Washington Times, Wall Street. We could try NY. New York Times, obviously they're covering the polls today. Bomb threats briefly closed some polling sites in Jersey. Election day begins. Ay, ay, ay. Oh, dear. All right. What else? Target shooting could be causing brain injuries. We measured the danger. Really? Maybe that's why I have so many problems. Blast wave. Each time a gun is fired, a supersonic pressure wave surges from the muzzle back towards the person pulling the trigger. Chest gauge. Average 1.1 psi. Head 1.3. That's from a 9 mil. The brain is a delicate network of jello. Ah, that's cool. Indoor ranges exacerbate blast waves. Reflecting more waves back towards the shooter. Right. Back of the skull. Okay. Potential harm gets almost no attention. Well, yeah. Because this is the liberal New York Times. You just want to take our guns away. U.S. military says anything below 4 psi is safe. I put more than 4 psi in my tires. a shotgun, a revolver, an AR. These are cool slow-mo shots. 50 cal rifle. 7.1 average PSI on your head. And that's kind of cool. They put the fabric back there to show the blast wave. That is actually pretty cool. That's just a bag. How high is too high? Okay. Pulse. Okay. How to reduce exposure. Don't shoot. Headaches, fatigue, brain fog. Look at that. Post-shooting symptoms may be related to brain injury, often attributed to noise, protective gear, and poor ventilation. Wow. I mean, they're basically going as far as saying, like, you're getting these tiny little concussions almost. Mini concussions. Wow. All right, boys and girls, let's go shooting outside instead. All right. So, now what? I don't know now what. Republicans hold firm on filibuster. For now. Trump presses to end filibuster. Yeah, but once you get rid of it, everybody gets rid of it. Then Democrats get to do it too when it's their turn. I love how Doomer said today the consumer was doing great because Uber had a 20% increase in rides. Hello, car repossessions equals more rides than Uber. I mean, honestly, yeah. Yeah. All right, so Elon. Tesla shareholders. I wonder what Electric's take is on it, because Electric always has the great Doomer takes for Tesla. So, you know, if we need a Doomer video, we'll just go to Electric. Like, I mean, perfect title. Tesla stock used to help employees. Now it can't because Elon took it all. Told you. I told you. If you want a good Doomer take, just go to Electric. Tesla shareholders will decide, but another proposal is up for vote to refill Tesla's employee stock pool. And it's only necessary because that pool was drained to give Musk a payday larger than any other CEO in the world. RIP. One of the questions being asked Thursday is whether or not to refill the general share reserve, known as Proposal 3. The $1 trillion award is Proposal 4. Proposal 3 fills the general reserve with 60 million shares to compensate current and future employees, but also fills a special share reserve with nearly 208 million for a single part-time employee, Elon Musk. I like how they call him a part-time employee. This is the issue many have brought up, including some of the wealth funds. But Tesla has seen it fit to combine the two pools such that if you want Tesla to be able to compensate employees with shares, you must accept that Musk will have 3.5 times as many shares set aside for him personally as it will set aside for every other employee at the company combined. I mean, it's not uncommon for the CEOs. Pretending to be good at video games on his jet. It does seem like, I mean, there's plenty of credible evidence to suggest that Elon uses farmers to get his accounts to max level when he plays video games. But anyway. Let's see here. 208 million shares aren't even associated with proposal number 4, which would include over 423 million shares. So now we're up to 630 million shares for Musk, 278 billion at the current valuation, and only 60 million for other shareholders. Even if proposal 4 was voted down, proposal 3 could still give Elon Musk nearly $100 billion of stock. Wow. Let's see what the Times has to say about this. Y'all care about stuff like that? Like people think it's a gotcha or something? It is. Because, you know, when you imply that, oh, look, I'm the, or you actually bluntly say, oh, I'm a number, 5 player worldwide, and then you miss basic mechanics, you're not the number 5 player worldwide. Your account is the number 5 account worldwide, but it's a fraud. It's misleading. It's untrue. It makes it seem like Elon is actually good, right? At the game. So as a gamer, it's effed up. But anyway, that's old news. People already know about that. Tesla shareholders will decide this week whether the automaker should award its CEO as much as $1 trillion. But big questions about how tough the goals really are. Musk would acquire voting control over nearly 20% of Tesla shares if he meets all of the goals. But that's not the goal. The goal is to meet the lower goals. That's my take. They want to get the lower goals. I think that's where they're going with this. The plan would allow Tesla's board of directors to grant Musk a portion of the shares even if he fell short, of course. Somebody says, who cares? They're just video games. Well, it's not that it's like, who cares? It's just a video game. First of all, video games are really important to a lot of people. A. B, if you're lying about that, what else are you lying about? That's the greater question, right? Like if you need to lie about being good at a video game, then are you also willing to lie about things that matter, right? That's the bigger question, right? So there's like an integrity issue there. Let's see here. Musk. These are independent decision makers. Yeah, we already know about that. The Delaware court decision. Tesla board's active. Supporters of Musk. I don't see the concern. Denholm. Blah, blah, blah. Even the Pope has weighed in, citing Musk's pay package as an example of the rich and the poor. Right. Let's see here. Somebody in the chat's like, he's good at the game. This is a dumb take, man. If you think he's good at the game, you haven't seen the videos of people breaking down all of the basic failures in his ability to play the game. You should look those up. Tesla sent a letter to shareholders, blah, blah, blah. None of this matters. None of this matters. Many analysts expect the plan to pass because Elon Musk is allowed to vote his own shares. Oh! Where the company moved to Texas. He controls about 15%. But if the new pay package secures fewer than half of the shares owned by outside investors, it could hurt Tesla's reputation. Nah, that's unlikely. Shareholders. Blah, 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 blah. That's interesting. Yeah, that's interesting. Cool. All right. Now, let's see here. Let's look at the pay package. Tranches. Inside the pay package. All right. 12 operational milestones, starting at $2 trillion for the first, followed by 9 at $500 billion increases, which each extra $500 billion becomes easier, right? Market cap must be held for 30 days. So what's their cap now? Isn't it like 1.2 or 1.5 now, or what are we at now? We are at a $1.5 trillion market cap. So you actually don't have to go that far. Four product goals, 20 million vehicles delivered total. I mean, this is like guaranteed to happen. Just over time. 10 million FSD trials. Or subscriptions, rather. 10 million paid FSD subscriptions. I mean, that'll happen over time, too. Even just as, individuals... Oh, did Burry just tweet again? Even as just individuals, buy new cars who are already into this. So, okay, that's just him with a photo of Christian Bale. Okay, that's fine. Retweeting that. Yeah, here you go. Operational milestones. Like, these two are relatively easy milestones. The first two. Now, how much does he get for the first two? Because, those, I think, are the easy land grab, right? Which is fine. That's not unusual. The shares vest 7.5 to 10 years after 2025. Okay, good. So, the idea is that you keep Elon there for at least 7.5 years. Because you have to be the CEO or another executive role. Here we go. Stake earned. Tranches, 2. Stake excluding 2018 award. Stake including 2. This is total. Okay. So he actually, the first 2 tranches really only earns about 2%. Now, 2% of a $1.5 trillion company is still 30 billies. That's pretty good. And then, of course, it would be worth more at that point, because to get to the first 2 tranches, you actually have to be worth 2.5 trillion. So 2,500, that should be 50 bill, right? Yeah, 50 bill. Yeah, that's interesting. All right, interesting. Yeah, so... Yeah, we failed the test so far on the Qs. The continuous bleed, not ideal. We really needed to pass this test by lunch. That was our rule of thumb this morning. And Bitcoin is really suggesting a continuation of this liquidity crisis. Oh, look at that bounce at 102. How do you view the price to earnings ratio of Palantir? Well, if you actually watch the end of my Palantir earnings video, the critical video, I said the problem is this is worth $90, the stock. All right? So, the earnings were great. The valuation is kooky. Let's see here. Nobody's saying that gaming, people playing video games is supposed to be some barometer of honesty or integrity. I mean, that's like saying, you go steal from somebody's house in a game of Rust, that, you're a thief and a criminal. Nobody's saying that. What I'm saying is, if you're going on X saying, look, I'm the number 5 player in the world, you're lying. You're not. You had a team of people move your account into a position where you could mash some buttons and make it seem like, or you are emulating somebody who had gotten to that position. That's a scam. That's a lie. Now, if you say, hey guys, I bought a number 5 position in account in the world, and watch me, play 10 minutes of it or whatever, fine. But that's very different, right? That's the difference. And I think people miss that. That's just basic logic. And anybody who doesn't see the problem with that probably has too many Tesla shares, and so therefore there's some bias there, right? Just let's hope Elon doesn't play us. Well, Rust moments. We'd cream Elon in Rust. Man, I haven't played Rust in so long. I'd love to play some Rust. I gotta edit my house hack video, and because we did a lot of filming yesterday on that. Yeah. Okay, so what else? Core weaves under 120. Targets falling under 90. Wow, dude. Let's go to the week chart on this. So if I go to the week chart, 78 is COVID low. Wow. Wow. Yeah, I love how Ellis in the chat has to say, oh, well, okay, fine, Kevin. Maybe Elon lied, but come on, man, everybody lies. Come on, man. Like, at what point do we just say, Ellis, you're coping here? Okay, we're not trying to, like, be mean here. Just, like, let's be real. Let's look at the slippery slope of your argument here. The argument continues to collapse into a more and more ludicrous position of, at what point are you just, like, at what point do you need to, like, have somebody put a mirror in front of you and realize that you're on your knees with your face deep in Elon's waist? Like, at what point do we just admit that you're on your knees? Like, at what point do we go to the doctor because your knees are so bruised? I don't know. All right. So, all right, let's see here what else is going on in the Doomers. So, dollar strength all the way from April, stock sluggish. NASDAQ needs even bigger profits to rally. Let's see here. Let's see here. Fate of global stock rally has a lot to do with China. We saw that. Dollar strength, we saw that. It would take more bearish bets to burst the IABO. I agree with that. Oh my god. You can prove anything with liquidity data. While money market liquidity remains a significant concern, Tuesday morning's updates should assuage a few fears. Some of the recent squeeze looks like it was down to month end, as Monday's SOFR fixing dropped, though it's still above the rate we've been seeing. Meanwhile, standing repo has dropped. In the grand scheme of things, it's still peanuts. So on the macro liquidity front, one needs to be careful in analyzing the relationship. The temptation is to treat data like the Inquisition. That's fair. Let's see here. Okay, that's fine. Let's see what else here. Elon Musk is as good as playing video games as he is at manufacturing roadsters. Oh! Don't hit it where it hurts. Okay, Apple readies low-cost laptop to rival Chromebooks. Wow. That's interesting. Apple moving into the low-cost territory? Apple is preparing to enter the low-cost laptop market. It will be sold for well under $1,000. Wow. They want to compete with Chromebooks. In schools, Apple's entry-level iPad compared with Magic Keyboard was roughly $600. That might be the target for their pricing. Oh, that's interesting. That is interesting. Okay. ADP. And then what is this? Liquidity. A few would comment on the importance of liquidity, right? Commentary. Blah, blah, blah. Blah, blah, blah. Broadening shortages. Funding spreads. Right. Funding spreads and SFR illustrate the squeeze in bank funding. Right. It is getting worse. Still, liquidity concerns are the sort of thing that can become self-fulfilling. If an institution has ample liquidity on its balance sheet, stress elsewhere will lead to the tendency to hoard it unless the opportunities to provide lending it out are very substantial. This might seem relevant for equity funding, where the run-up in stock prices had led to new all-time highs. It seems reasonable to posit that we could reprice last year's equity funding squeeze. Equity financing costs were high. Right. Macro liquidity benign at the moment. In fairness, strong relationship, Fed activist curve. Okay, general principle, correlate, blah, blah, blah. Excess liquidity is back to flat. Right. That's interesting. Let's take a screenshot of that. So, I like this argument that the greater issue is the self-fulfilling nature of a liquidity crisis. Okay. Ooh, Bitcoin's now losing 102. Yeah, we just lost 102 on BTCs. Okay, let's take a look at this. Somebody in the chat says, there are plenty of other things we can do to look at Elon's integrity. Yes. Yes, like his tweets. And amplifications of unverified information and rumors and memes and speculation. All right, let's see here. So, spoiler if you didn't understand what I just said. I think Elon is kind of a retweet first, ask questions later kind of tweeter. And it's bad because it amplifies wrong information a lot. Like, I've turned off notifications for him a very, very long time ago. I don't pay attention to his stuff. Okay. So this is the interesting stuff. So here we have excess liquidity at flat, liquidity at flat, but funding stress in SOFR minus IORB rate below delta could create self-fulfilling loop is really okay. Let me get the IOB rate. That'll just take me a second. Okay. Let's see here. Broadening shortages. Yeah, this is what you're seeing with crypto as well, with the liquidity issue. Oh, and then we need to look at the MicroStrategy situation. So, because their liquidity situation was very interesting. We're going to look at that in just a sec. And then MSTR. Okay. So, let's get the MSTR situation. Let's see here. Bookmarks. Bookmarks. Okay, here we go. So, here we go. It was this guy. I think it was this. No. Where was it? This guy. This thread was very interesting. Okay. MSTR sold 69 million in equity, mostly common stock, to buy 45 million in Bitcoin. Okay. We need to also see the investor relations for MSTR. And let's get the last. Do we have an SE? Do we have a financial? We have the 10Q. Okay, perfect. Let's get rid of the 8K. Let's go to the 10Q. strategy, MSTR, MicroStrategy, 10Q, 11.4. Because this will give us a little bit of a look into liquidity as well. Open Sesame. Okay, here we go. So here is their actual cash flow at MicroStrategy. So their actual operations burn cash, right? So we are down negative cash from operations, okay? That does not include the purchases of Bitcoin yet, because that's right here. Free cash flow is negative, what are we at? 27 plus 45.6, we're at negative 72 mil. Free cash flow in 9 months, okay? All right, so we have negative cash flow. Then where's the money coming from to buy $19 billion of Bitcoin? Well, here's $11.8 billion to sell for selling common stock. Here is the sale of preferred stock of $5.8 billion. Here's the sale of convertible notes for $2 billion. Long-term debt, 21 mil, that's pretty nominal. So this is a money-raising machine here, right? So here we raised 11.8 plus 5.88 plus 2. 19.6 billion raised. Oh, wow. And look how much Bitcoin they bought. Raised in just yellow. And look at that. What a surprise. 19.3 billion of Bitcoin bought. So a little bit of loss there. Okay. But the point is, you know, we are issuing shares to raise capital, and we don't actually generate cash flow otherwise. Okay, got it. We understand that. All right. So now, here. All right. MicroStrategy sold 69 million in equity to buy 45 million in Bitcoin. This is the business plan. Okay? They could have sold 24 million in equity and bought 0 Bitcoin, but that does not look so good. I mean, it's right about that. Okay. Here we go. If you think MicroStrategy is selling common to pay preferred dividends, why did this go away? Rest easy. The real operating income covers the preferred dividends, and the proceeds from the common at the money cover the operating expenses. Boom, problem averted. Okay. So let's do this. There we go. And then he writes, I'm ambivalent on the investment. I just think there are better ways to get exposure to leverage Bitcoin, which I agree with better control. So I hearted this. Less uncertainty and dependence on third-party execution. I think MicroStrategy gets hit hard in a Bitcoin bear cycle, but that's the same for anything that touches Bitcoin. Totally. I'm just anti-obfuscation. I can't even say that word. And marketing gimmickry. Fine. Okay. Software side of the business does not come remotely close to fulfilling the quarterly, let alone monthly dividend expense. So that's what I was confused by. So the statement, real operating income covers preferred dividends, is absurdly incorrect. As an attorney, you should know better than to make blatantly false statements. I like the double space right here. Okay, so let's go look at it ourselves. So here I have total revenues of 128 mil. Cost of revenues, I've got gross profit of 90 mil. And then I've got, but he says OPEX. So we do have 90 mil of operating income. That's where the guy's getting this from. 90 mil OP Inc. And we have the interest expense over here. Dividends on preferred. Yeah. So, I mean, he's right. The operating income, the gross profit doesn't even cover. Does not cover the dividends on the preferred. So, I don't know, maybe the guy was looking at an old financial statement or something like that, because the dividends over here were 0 last year on the preferreds. Now, over here, you can actually see here, gross profit does cover it here. It's just in the recent quarter. So that could be the distinction there. The guy didn't reply. Yeah. But essentially, because of the negative cash flow, you have to raise more in Bitcoin than, or in equity than you're actually getting in Bitcoin. Wow, it's really selling down now, isn't it? Yeah, look at that. Yeah, this is an issue. I broadly think this is a liquidity issue. I'm gonna break this down and explain all of this in just a second. Okay. All right. Let's do a breakdown of all this. So, liquidity. Talked about CZ. Michael Saylor on his private island avoiding MicroStrategy investors. Yeah. Yeah, that's not that surprising. Unfortunately, in a real down cycle, MicroStrategy is going to go down just like a leveraged strategy. Hopefully we don't have that because it'll just hurt a lot of people. Okay, we talked about the NVIDIA chips. We know there are elections today. The looming credit risks, that's obviously an issue. The Russian relations, the crazy numbers. The 10-2 spreads back above 50, which isn't great. So then. And the private credit issues. The security guard lawsuit. Repo facility, we looked at that. And then we spent a little bit of time looking at Tesla, but that's less of an issue for the liquidity thing. Okay. Alrighty. Wow. Yeah, just really gave up on this, huh? Still at negative 1.5 on the Qs. Yeah, any of that rally early in the day already got busted. The liquidity just didn't last. It dried up really fast. All right, let's do a summary of all this. Oh, man. I really need more coffee. Ugh. But I'll have to do it after this. Wait, maybe I can put an order in for coffee. Stand by. Do you mind bringing me a new coffee? Cool. All right, I placed my order. Oh, man. All right, what else do we have? Let's see here. Hold on. Okay. Very well. Okay. Well, folks, we might be at the beginning of a doom loop of a liquidity crisis. And in this segment, we're going to explain what that means and what that could mean for the stock market. Now, we've been talking about these potential liquidity issues over the last few weeks on the channel. In fact, if you've been watching the warnings we've been talking about, none of this should be a surprise. In fact, starting about 2.5 weeks ago, we started flagging the FMS, the Bank of America Fund Manager Survey. Now, these are their words, not mine, but look at them yourself as a reminder. I keep in mind, these screenshots are all in the Meet Kevin app, which you can download for free on Apple or Android. You get the Daily Wealth and the other. It's totally free. You can see them there. But anyway, the Bank of America Fund Manager Survey average cash level has declined from 3.9 to 3.8%. This was posted mid-October, about October 16th. The sell signal for the Bank of America Global Fund Manager Survey was last triggered in July when cash fell from 4.2 to 3.9%. If we sit at or below 3.7, we move to a hard sell indicator. Now, right now, in the last survey that came out the last week of October, so fast forward about 2 weeks, we dropped all the way down to about 3.8%. Now, this is old news. We kind of already know this. I just want to catch you up on this. Usually, when we get to these low levels of cash available, people start becoming, frankly, unable to buy the dip. A recent example, or actually a few recent examples of where we had more cash available to buy the dip, and then we had Nike swoosh style recoveries, were Liberation Day. We essentially Nike swoosh straight up from there, right? S&P up like 30+% from there. Cash was much more available. Take a look at October 22. This is roughly when I bought my NVIDIA shares, which, are like massively up. But I bought the dip on chip stocks in October of 22. In fact, I had a fund that was basically had a huge allocation to chips. And I'm like, guys, this is like, we're in a chips recession. This is the perfect time to buy chips. Look at where cash levels were in October of 22, around 6%. Way higher than where we sit today, or even the COVID low of April 20th. So it gives you more recent sort of memory examples of when those cash levels are higher, we can usually sustain a larger rally up. Right now, we sit at a very low level, which roughly aligns with the end of 2021, roughly aligns with other pain points where historically stocks haven't necessarily performed the best. It's only one signal, it's not the only signal. That's the Bank of America Fund Manager Survey. Another signal that we paid attention to in the Course Member Alpha report this morning, where we set up our strategy for the day. In fact, I'll tell you what our course member strategy was this morning. I'll just break it down for you. You can take it for what it was. But one of the things we looked at this morning was actually a dangerous double top. Now, this is not broadly on an index. This double top that formed, this is just an example of, this is a really low resolution, crappy image of what a double top looks like. And then it usually continues with a fall off the cliff to the right side, right? This dangerous double top has actually formed on a company that I think is exceptionally profitable. It has a relatively low PEG ratio. We're at about a 2, so frankly, it has about 20 to 30% upside in the stock based on where its valuation sits and its growth forecast sits and where forecasts sit and where its margins are. This is a company that, first of all, I highly respect the CEO of, and the valuation's fair. And what company just had a double top on the day chart? Microsoft. That is another indication of liquidity concerns going into, of course, the Palantir earnings we had yesterday. There's a reason why in my video yesterday I called Palantir earnings critical before the earnings came out. Because it's a sign of, will there be enough liquidity to keep the pump going? We've obviously extended on sort of this like euphoric tip over here, and clearly the answer is no. There's not enough liquidity to keep the pump going. So start adding these things together. This bizarre double top on Microsoft, I don't think is idiosyncratic, because when you look at the company itself, the numbers are great. So you have a double top on Microsoft. You have a euphoric tip on the Qs, your triple Qs, your NASDAQ 100 tech index, and on Palantir. So you've got that euphoric kind of rotation up, the double top on Microsoft with the euphoric rotation. Then you have the fund manager survey, which is a red flag of liquidity. Bitcoin's price only moves because of liquidity. I will explain more on Bitcoin and MicroStrategy in a moment. And then number 5 catalyst is actually what's happening with funding rates, especially at the Federal Reserve. Take a look at this. If you subtract the SOFR rate from sort of base international rates, you can see the delta of how liquidity is funding up or drying up in the banking sector. Now, this is actually a pretty big red flag, but it's early. Broadly, it's not enough of a liquidity issue yet. But here's the self-fulfilling nature that could happen. The doomers point this out really well. They say, liquidity concerns are the sort of thing that can become self-fulfilling. Even if an institution has ample liquidity on its own balance sheet, let's say JP Morgan and Chase, stress elsewhere will lead to the tendency to hoard liquidity until there are better opportunities. So the problem with this credit cycle that we're in right now, which I didn't think would come this early. We know the cockroaches are a problem, but I thought we might still be okay until at least the government reopening. The problem that we face, though, is the sheer number of warnings we're getting on credit risks are becoming concerning. And that's what's changing the game here. It's not just what you're seeing at the repo markets, which yesterday we had another surge in repo demand. Now, in the grand scheme of things, is $29 billion or $14 billion plus 7, are these numbers, well, I guess that's 49 versus, 21 billion over here. Are $49 to $21 billion of repo stress really that big of a deal? In the grand scheme of things, they're relatively small numbers, right? But you have to go all the way back to COVID to see the credit stress for any of this to actually matter. If we go back to, or like 2008, this is kind of when you start seeing credit stress because you have a big gap over here. This literally jumps from 2018 to like 2019. So we don't actually see, there should be a giant white gap right there, but they just deleted that. I don't know why they do that. But if you zoom in a little bit just to make the dates make a little bit more sense, there we go. You can see we've had no liquidity issues except for once very briefly right here this summer, and that's it. And lately they've been ramping up again like in COVID. And that's why that delta chart is so concerning, because it suggests that there could be a self-fulfilling start to credit concerns. See, UBS is warning of looming credit risks from credit ratings, which I hate to say it, but sounds very 2008-esque. He literally says, there is now a growing chorus of voices pointing to risks in the multi-trillion-dollar credit rating industry and the insurance industry. Because basically, rather than using big credit rating agencies like maybe Standard & Poor's or Moody's or whatever, rather than using the big and expensive companies, you can actually now just call up, quote, small rating agencies to check the box of regulation and then just share those private ratings with certain issuers and investors to get debt or investments. And you don't actually have the reputation of a large credit agency anymore. You have the reputations of a bunch of small credit rating agencies rating debt, which just amplifies the potential risk of the private credit bubble. Now remember, people are like, oh, but private credit doesn't affect the banking system. Wrong. The IMF tells us that 90% of lending to private credit comes from big banks like JP Morgan and the other big boys. They just get done through convoluted, assortments of capital, which is scary. So now what you have is not only this Tricolor and First Brands collapse or some of the other issues that you're finding in private credit. We just saw Renovo Homes go bankrupt, taking out a bunch of, smaller contractors in home renovations. But you're also finding that this is going so extreme that credit agencies were actually giving First Brands and their auditors were actually giving First Brands good reviews good ratings, good audits, or passing audits. Mind you, First Brands didn't use a PCAOB audit, which I think is very important. This is your highest standard of auditing. They used lower standards of auditing. But look at this. The company First Brands is now literally suing their founder because the CEO funneled up to $700 million into his own mansion, into his fleet of 17 exotic cars, a celebrity personal trainer, $3 million of luxury rent for a townhouse in New York, $500,000 to a private chef. And what's concerning to me is not that that's the kind of scam that happened at First Brands. It's that the non-PCAOB auditors apparently missed all of that. And apparently the credit rating agencies missed all of that. I mean, it goes so bad that they literally talk about certain invoices saying that, oh, First Brands actually sold products worth $11.2 million that you could finance against, when the reality was the product was only worth $2.3 million. That's a scam. That's fraud. It's no surprise that there's fraud here, and the CEO, if this is true, should go to jail. The question is, or the bigger concern is, wait a minute. What if that means there's a lot more uncovered fraud like that everywhere else? And that's why you're starting to see these funding stresses create concerns, because these are signs that other banking institutions are going, you know what? We're just going to hold cash. We're going to see how many cockroaches are out there. And once you get that tightening of credit, that's when the true problems happen. Now, we're not quite there yet. Excess liquidity, if we look at excess liquidity charts, we're flat on excess liquidity, so it's not like we're super low on excess liquidity. And on top of that, we're not in this place where credit spreads are signaling some form of massive dry up in lending yet. You can see that here. Credit spreads are still relatively tight, which is bullish. You could see financing costs are rising, but we're not like skyrocketing, and we're still seeing a generation of commercial and industrial loans. The problem is this chart only goes through the third quarter. So we don't yet know what stresses are going to show up in October. So these are things to pay attention to, but we could see the seeds of a credit crisis and a liquidity crisis are real. So what did we talk about in the Alpha report this morning? Well, I made I had a very clear, we spent probably about 30 minutes coming up with a strategy, in the actual stream. And obviously it took me a lot longer to prepare it before my stream, because I try to go into the streams prepared. So when people come to the Alpha report, we're like, okay, Kevin's already going to start by talking about, here's the game plan for today. And that's basically what we do. So, we start our course member live stream, we go live, and I break down, here's the game plan for today, here's what's going on, here's what you got to watch for, here are the traps, and here's my strategy. So what I said in the Alpha report this morning, which you can get that at meetkevin.com, we've got like a quiet code that you could use. It's NVDA for NVIDIA earnings coming up. It's going to be a bigger deal next week and the week after when we get towards NVIDIA earnings, which is really the end of our catalyst for earnings, by the way. They actually had pretty damn good earnings. Like Palantir earnings were good, it's just their valuation is kooky. The only way you could keep the valuation going is by having loose liquidity. So anyway, the strategy we had this morning was we need to see if the Qs can make it to 630, otherwise bearish. So what happened? We made it to 627 and then we started bleeding. Volumes started declining, the Qs gave up. We're basically at the same places where we were at the open. And our strategy was, I'm not interested in buying the dip unless we can prove 630, because proving 630 means we have enough liquidity in the market. If we lose 630 or we have a sell-off at either the end or beginning of the day, that exacerbates liquidity stress, because now people are like, crap, I got to pay off margin, I got to pay off debt, and they don't have money to buy the dip, then you could actually end up getting more of a dip over time. So that's just an example of what we talk about in the Alpha report and how we set that up this morning. And so far, that seems to be exactly what's going on. Now, what does this broadly mean? Well, near term, we shouldn't really be having a sell-off on fear over jobs. I mean, in fairness, the ADP report expectations are all over the place for tomorrow. ADP expectations literally imply that no one has a clue. Like, I literally wrote that here. Nobody has a clue. Now, the standard deviation on this is 27,000. I'm sorry, it's less than that. I think I can't remember what the standard, actually it might be 27,000, but let me check. The expectation is that we're going to get a 40,000 jobs read on ADP, but look at how diffuse the economist estimates are for ADP. You've got some people sitting at 60, 64, 68, which would be great, but you've got some economists at negative 20,000. You know, any negative read would be terrible, but there's no consistency here on what people think. It shows that people are even more confused with what's going to happen. The standard deviation, yeah, it's 26,470. All right, so about 27,000, 26,000, whatever. 6 or 7, somewhere in there. So the estimates are all over the place. This data comes out at 5:15 in the morning tomorrow. I don't think that this is why the market is concerned, though. Now, if we get a really bad ADP report, you know, if we come in under 0 tomorrow, it's going to be bad. Anything over 0 is actually positive tomorrow because we'll be within break evens. But if we get something that's negative, then there's a real sign that we've done an oopsie doopsies with the Fed and they are behind. See, I tweeted this yesterday. You can follow me there at RealMeKevin if you want. But anyway, wow, first person at the Fed who understands this. And it's, quote, Fed Daily says if you wait for the job market report to show weakness, you're already behind. Correct. You're already behind. What are we seeing on state unemployment claims data? State unemployment claims data is showing us that at the end of September and at the beginning of October, we're starting to see pickups in unemployment filings. In addition to that, we had a lot of layoffs in October. Now, what happens when you have a stabilized job openings rate and layoffs rise? Well, when you have a stable openings rate and layoffs rise, the only place this curve goes, these purple dots, start going to the right. And then you get what's called the normalization of the Beveridge curve, which is bad. Because when the curve starts going out to the right, the unemployment rate skyrockets fast. Like really, really rapidly. You don't actually need to see much of a decline anymore in the job openings rate. You just need to see layoffs. And then the skyrockets to the right really fast. So broadly, this liquidity issue that we're facing is all related, in my opinion, to private credit. And because of these private credit issues, you're seeing less support for Michael Saylor's Bitcoin buying strategy. Literally, his company is now named Strategy. So if you look at what Michael Saylor is doing, you can see that Michael Saylor, just as based on this quote tweet here, acquired $45.6 million worth of Bitcoin at 114,000. Okay, fine. So we're down 14% on that, but whatever. They're still up on their average cost, right? Their average cost is $75,000. And they don't really have bonds due for a few years anyway, so you would really have to see a true collapse in the price of Bitcoin to see Michael Saylor have any problems. Now, I personally think, and this is my opinion, this pisses off a lot of people in crypto, but I hate to say it, I personally think the only way you get to the true value of Bitcoin is when the treasury companies go bust. I hate to say that. I hate to say it. I've been saying it for years. And that's not to say like I'm bearish or making a directional bet in the short term. It's just to say that once that liquidity support dries up in crypto, that's when you actually get to more of the true value of what Bitcoin's true value actually is. Because you lose that order book support. You have to think about all these treasury companies as really like peg legs propping up the value of Bitcoin, not actual like demand. Because what you're doing is you're breaking the piggy bank, which is a piggy bank that doesn't last forever, right? You are taking the piggy bank of the stock and you are breaking the piggy bank of the stock to fund Bitcoin purchases. But it doesn't last forever. What happens when the piggy bank runs out of shares to liquidate? Like, in other words, the shares go to a very low value. Then you can't pay your debts back. Then you go bankrupt. Then you don't support the purchases of Bitcoin. Then you might actually have to start selling Bitcoin just to pay back your debts. And then you have problems. Obviously, that's like the doomer bear scenario. But the point is that if you actually look at the numbers at MicroStrategy, you can see that fundamentally the business cannot pay all of these payments based on the money they make. First of all, look at this. The dividends on just the preferred stock alone in the last 3 months 3 months of dividends for their preferred strategies and their other funds, and Strike and the Strive and all these other like feeder funds that they've created. Their gross profits on their software of $90 million, their gross profits do not cover their dividends on preferred stock alone. Now, if you actually look at net income, well, it's even worse. Now, I'm not going to use the unrealized loss here on digital assets, but if I look at their net income, I could take 90.6 minus 29.9 for sales and marketing, minus 22.6, minus 38.1. It's literally zero. What? Did I do that math wrong, or is that literally zero? I mean, mental check here, 40, 60, 30, 60 plus 30 is 90. Yeah. Dude, if you literally take gross profit and subtract just sales and marketing, research and development, G&A, it's literally zero. So they make no money, which we could have already known that by going to the cash flow statement. The cash flow statement makes this obvious. Their cash from operations is negative $45 million. Their free cash flow is negative $72 million in 9 months. And the only reason they were able to buy $19 billion of Bitcoin, which they were able to purchase right here, is because they got proceeds from convertible notes at $2 billion, proceeds from selling preferred stock under the other entities that they have, and proceeds from selling MicroStrategy stock. So in other words, if MicroStrategy stock goes down, the peg leg of Bitcoin liquidity is gone. And then it goes down. It's really simple. Liquidity is nothing more than an order book. You have to understand order books to understand liquidity. I don't know that I really want to explain order books right now, so I probably won't. But if you don't understand how an order book works, maybe start there. Okay, we actually talked about that this morning in the course member live stream, but that's more educational. You're welcome to watch that. It's meetkevin.com. But I think another, and this is, I don't know if this is another symptom of liquidity, but I want to mention it. So I think another symptom of liquidity could be that we're seeing a lot of people diversify into HouseHack. Now, I'm not trying to make that a pitch. And just to be clear, like, this is not a solicitation. If you want to invest in HouseHack, you go to househack.com or reinvest.co. Read the offering circular. Every investment has risk. Okay. But I believe that what we're seeing is this skyrocketing of investments into HouseHack, partly because people look at it and go, it's based on, the company's valuation is based on an August of 2024 valuation. So imagine the stock market was frozen in August of 2024 when the company had way more expenses and way fewer assets and no AI strategy. And that's what people are investing in at now, including myself. Like, I'm buying shares before the end of the year because I'm like, this is great, right? It's like this frozen in time valuation. And so I think because people know that and they know it's backed by real estate, they look and go, okay, well, we're going to diversify away from stocks at all-time highs. And so when we get these red days, people are diversifying away and they're like, I need to diversify. And so on these red days, I feel like it's like a liquidity signal. People are like, okay, it's red, take some money off the table, let's diversify a bit, and who knows, maybe they're using some else to pay down cash or pay down debt or hold cash or whatever. I don't know. But, we raised $1.5 million last month, which is insane. I think that was like our highest month this year since we started. I think maybe second highest. And then, I think I would probably cross $500,000 today for November because we were over $400,000 for the first 3 days. That's Saturday, Sunday, Monday. We were over 400 grand, which is wild. Which, on one hand, you could argue, wait, doesn't that imply more liquidity? Maybe. But I actually think it's people selling other assets and diversifying away from things at all-time highs, like what we saw with the Palantir numbers, right? We went into Palantir with a euphoric spike and like an 8 peg and a lot of trader momentum. So it's no surprise that you're moving down on Palantir post even good earnings. But this is a sign of liquidity. If people had more cash, the stock should be going up on those earnings, not down, which is convenient for Michael Burry because obviously Michael Burry, he's now shorting NVIDIA and Palantir, but he disclosed his shorts as of, I believe, September 30th, the end of Q3, which means he's actually still upside down on his shorts if he had those shorts as of September 30th, assuming he bought them the very last day of the quarter, because NVIDIA and Palantir are still up from the end of that. But some people see that as potentially a sign that Michael Burry thinks this is the next bubble. I don't know what would give that away. Maybe this, post about the capital cycle ends with a shakeout and a consolidation. Okay. Basically how everything is leveraged to the tits. I mean, I showed Palantir's assets yesterday, and I don't know what people were talking about with leverage to the tits. All I saw was leaked footage of Palantir's balance sheet. And all I have to say is, damn, those assets are hot. Okay, that's it. That's all I got to say about Palantir. The assets were hot. Beautiful balance sheet. I mean, nobody knows a balance sheet better than I do.
Kevin is much more interested than most people, by the way, in the balance sheet.
Michael Burry tells us that growth rates for the prior 5 years at companies like Amazon, Alphabet, and Microsoft have basically peaked. Microsoft actually being the least of the issues in terms of declines relative to 23, 4, and 5. So he's arguing that people are taking on all these billions of dollars of debt via bonds or feeder fund bonds or whatever to fund this CapEx cycle while their actual cloud segment year-over-year growth is collapsing relative to the historic average. Now, in fairness, back in 2018 to 22, those were COVID days, so your average could be pumped up by COVID numbers, right? So maybe it's not that fair to compare to those periods of time, but, this gives you sort of a balanced view on Michael Burry here. Now, of course, I can't reply or quote tweet any of these damn Burry posts short of taking a screenshot because the bastard blocked me. The bastard blocked me because I showed him an eggplant. That's it. I replied to him with an eggplant emoji and I got blocked. So who's the real weenie baby here? Anyway, all of it right now markets expect that liquidity can keep booming. I mean, look at this. Anthropic projects $70 billion in revenue, $17 billion in cash flow in 28. Dude, people are pulling numbers out of their ass to keep numbers going. Now, maybe it'll keep going. But, to project out 3 years or 4 years or 5 years for LLM products that could become commoditized, just like Satya Nadella warned. When the CEO of Microsoft is saying, all your crap might become commoditized, but we're going to make money off the commodity anyway because we're going to be farmers like the farmers farming soybeans, it's kind of a warning sign that maybe some of those numbers are just speculative pie-in-the-sky numbers. But people are in pain. How do we know people are in pain? Well, because CZ tells us that when Bitcoin's down 13.7% from all-time highs yesterday, he tells us that people are in pain. But then again, Donald Trump doesn't know CZ, so maybe, even though he got pardoned by Donald Trump, and even though CZ is helping fund and promote the World Liberty Financial token, which is basically bailed out by the feeder fund called Alt5, which is also a scam. I mean, it's a publicly listed stock, which happens to have a support level at 0 because I expect it's going to go bankrupt and delist because it's a scam. I mean, because it's just going to come upon hard times. We really end up with a big question of, do people have, this is what it all boils down to. Do people have money to buy the dip or not? And unfortunately, if banks tighten lending because of this private credit crap, we haven't seen it yet, but we're starting to see it. The signs are starting to come. Then unfortunately, even short-term bullishness could be misplaced. Now, you know me. I'm not like a 10 out of 10 on the bear bull scale. I'm pretty mid-range. The reason I'm mid-range is because I believe in the short term, absent, some credit crisis, we should still be bullish until the government at least reopens because we just have a lack of data. And there really are good earnings. But what's weird is we're now coming off really good earnings and big credit warning signs. Now, a lot of people discounted this October 31st spike, and they said, oh, but Kevin, that was just because of the end of the month. Fine. Then how do you explain November 3rd's spike at roughly half of that spike? Sure, it's not as high, but it's still way higher than what we've seen. So take the end of the month out. Yesterday was literally the highest spike here. And this spike is still growing. You can't really look at this one yet. You have to wait until tomorrow to see the full funding for November 4th, which makes intuitive sense. The day ain't over yet, so how do we know how much funding has been used yet? So broadly, there are real issues. Liquidity is the name of the game. In order for stonks to keep going up, you need buyers. In order for Bitcoin to keep going up, you need buyers. But margin is at all-time highs. What if everybody's already margined, max level margin, and we just can't do any more margin? Then there's no more money. I can't tell you how many of these brokerage apps, Robinhood included, send notifications going, hey, guess what just went down because the Fed cut? Margin rates. Want some margin? It's insane. You know, Robinhood will show you your buying power is like 4x your cash. And these are like crazy numbers. Like I think my buying power on Robinhood, just the Robinhood app, it says my buying power is like 30 or 40 million dollars or whatever it is. I'm like, this is retarded. Like that's exactly how to go bankrupt is maximizing your buying power and then the market hits a down cycle. It's insane. That's just Robinhood. You know, I see it on the other apps too. I get the notifications on the other apps that I use. I'm like, this is crazy. So it makes sense. Now here's the strategy that I would watch for, okay? So here's the game plan. All right. The game plan is simple. To understand the game, got to make it to the end of the Me Kevin videos. But here's my take on the game plan. So first things first. Show up tomorrow at 5:15 a.m., okay? Come to the live stream. And then join the Alpha Report. At meetkevin.com. You know, you could use that code in video. All right. So tomorrow, we have the ADP stream. My opinion is that if we get anything under 20K is immediately going to be seen as recessionary. Very bearish, okay? Now, anything under... negative 20K. My bad. I didn't mean to put the dollar sign there. Anything under negative 20,000 is immediately going to be seen as recessionary. Okay. Anything close to zero will be seen as acceptable. Okay. And anything, let's go. So this would be more like plus and minus. Let's go plus minus. And then anything over 20K is bullish GDP, bullish bear bull scale, neutral on rates, but, bullish economic growth and soft landing or whatever we want to call it, right? So the current estimate is 40K, which suggests we are going in bullish. So the surprise factor will be the left tail, right? So down. The surprise factor is leaning to the downside tomorrow because estimates are already so enthusiastic, right? That's not great, but who knows? I mean, we'll see. We saw that the estimates are very, very diffuse, but that's the strat. Now, the other thing that you need to watch for is you need to watch for institutional liquidity. Then watch institutional liquidity. What's institutional liquidity? Institutional liquidity is market on open and market on close trades. So like if you see a giant tank at the open or close, that's a sign of a lack of institutional liquidity. It is a red flag. If you see a benign close, inflows into the close, it means people have money. This is why today I said in the Alpha Report super clearly to everybody who's part of it, thank you for being a part of it. By the way, people have been asking in email, they're like, okay, like, is there going to be a better price Black Friday? We guarantee that if you buy the Alpha Report now, you will have the best price. So whatever happens Black Friday, that's worth knowing, like in at the best price. So anyway, the reason we wanted to watch 6:30 was because it's not uncommon to get these sort of like faint-hearted buy the dips right here. You really need to confirm that into the close. So if we can rally into the close, great. Happy with liquidity. It's a great positive sign. If we can't rally into the close and we actually bleed into the close, it just amplifies the liquidity issue. The same will be true tomorrow, except tomorrow's will be amplified by the ADP report. There you go. So, there we go. That gives you a nice breakdown of exactly what's going on. So somebody here writes, my broker is prompting me to link my other accounts to expand my margin, even in Canada. Wow, dude. So if you link your other brokerages, they're basically saying, hey, we'll go lend against the securities in those other brokerages as well, so you can maximize your margin over here. Man, that just sounds like a disaster, because what if they have to liquidate cross brokerages? Oh man, dude. It's the brokers and the FINRA system itself that's margined so badly. That doesn't make any sense. The brokers and FINRA don't take out debt for you. You take out debt. That's not a logical argument. Just because the system says, hey, Kevin, come squeeze these titties, doesn't mean I'm gonna do it. Because it's gonna be bad for my marriage and my children. I mean, if you take out all that margin, it's bad for your brokerage account, right? Like, just because the opportunity exists doesn't mean you squeeze the squoze. Crazy thought, right? So let's see what else he's saying. Some of you have Michael Burry comments. Definitely liquidity. Cash and cash equivalents are running. Look at Dixie and bonds. Yep. Yeah, and keep in mind that it is a little bit of a confusing signal that we are seeing so many inflows with house hack, because like if liquidity is drying up, why are house hack inflows so high? I believe it's because like if people say, hey, stock's at all-time highs, I'm going to sell $500,000 of NVIDIA, let's say, at a profit, and I'm going to put $100K into house hack. I think that's what's happening. Like the reason I think we see more liquidity is because people, A, want to diversify, B, they want that valuation from AUG24, and C, it's kind of just part of like a broader cash raise strategy. Like when stocks are going straight up, and there's so much liquidity, you kind of just like keep going with the boom of the ride of stocks going to the moon. So I think that it's a little bit of a complicated, like it's not as clear with a private equity offering. Somebody says, bro, as a woman, please enough with the tatas. Hey. I'm just not going to say anything. Anyway, so where were we? I think we were here.
Welcome. Nice to have you.